August has long carried a reputation as the toughest month for crypto investors. Historically, it's been a period marked by sharp sell-offs, unexpected volatility, and shaken confidence across the digital asset landscape. But this year, something unprecedented is unfolding, a seismic shift that could redefine how we think about Ethereum and the broader crypto markets. In just one day, nearly $3 billion worth of Ethereum has been snapped up by major institutions, sending shockwaves through trading desks and social media feeds alike. Is this the beginning of a historic breakout? Or could it be the first act in a classic bull trap that leads to a painful correction in 2026? Let's break down the facts, the risks, and what it all means for your next move. Welcome back to FinWise Now, your trusted source for global finance, cutting-edge crypto insights, and practical investing strategies. Today, we'll dig deep into why institutions are suddenly piling into Ethereum, the price levels that every smart investor should be watching, and the hidden risks that could turn this bullish narrative upside down. Whether you're holding, trading, or just crypto-curious, you'll come away with a sharper understanding of what's at stake and how to navigate the months ahead. Let's start with the current market context. Traditionally, August has been a minefield for crypto investors. It's the month when summer doldrums meet thin trading volumes, often leading to sharp corrections and a general lack of direction. But 2025 is rewriting the script. Ethereum is flashing an unusual and powerful signal, nearly $3 billion in net institutional buys in a single trading session. This isn't just retail FOMO or speculative hype. This is big money, and it's moving fast. Among the most intriguing players are treasury companies like Tom Lee's Bitnow, which has announced plans to accumulate up to 5% of Ethereum's total supply. That's a staggering ambition, and it reflects a broader trend. Corporate treasuries and small public companies are rapidly increasing their ETH holdings. As of early August, corporate treasuries collectively hold over 966,000 ETH, a massive jump from less than 116,000 ETHs at the end of 2024. This is more than an incremental shift. It's a paradigm change in how traditional finance views Ethereum. So what's driving this aggressive institutional buying spree? Several converging forces are at play. First, institutional adoption has not slowed in the face of regulatory uncertainty or past volatility. In fact, it's accelerating. The backdrop to this is a global financial system awash in fiat currency. The world's M2 money supply keeps breaking new records, fueling concerns about inflation and the long-term value of cash. Institutions are searching for new stores of value, assets that are scarce, globally liquid, and technologically relevant. Bitcoin has long filled this role, thanks to its fixed supply and first-mover advantage. However, Ethereum offers something different. It's not only increasingly scarce, with mechanisms like EIP 1559 burning a portion of transaction fees, but it's also deeply woven into the fabric of decentralized finance, NFTs, and Web3 infrastructure. For a growing number of institutions, ETH isn't just an inflation hedge. It's a strategic asset with both utility and upside. Looking back at historical performance, there's another compelling reason for the recent bullishness. In the first year following a Bitcoin halving, Ethereum has averaged a 64% gain in August alone. If that pattern holds true, we could see ETH reach the psychologically significant $5,000 mark as soon as next month. And this year, the bullish case is arguably even stronger, given the supply squeeze from relentless institutional accumulation. But to understand where Ethereum might be headed, it's crucial to analyze the technical landscape. Right now, the most important level on every trader's chart is $3,800. This resistance has been tested and rejected 4 times, making it a critical battleground. A decisive break above $3,800 could unleash a wave of momentum, with some analysts eyeing $5,600 as a potential target by November. On the flip side, there's robust support at $2,200, a level that has consistently attracted buyers and stemmed sell-offs during periods of weakness. As of August 6, 2025, ETH is trading at $3,608.33, reflecting a modest dip of 0.82% from the previous close. The day's trading range has seen a high of $3,652.83 and a low of $3,554.84. These numbers underscore just how pivotal the current moment is. The market is coiling, with volatility simmering under the surface and traders watching every move for clues about the next breakout or breakdown. Yet even amid the bullish excitement, it's vital to acknowledge the risks that could derail this rally. Analyst Benjamin Cowan and others have sounded a note of caution. This wave of institutional buying may be pulling demand forward, front-loading the bullish narrative and creating the illusion of sustainable momentum. If Ethereum surges to $5,000 or even $7,000 in the coming months, it's possible that the market could run out of new buyers. At that point, the story could flip from euphoria to exhaustion, setting the stage for a sharp correction. We've seen this movie before. In previous cycles, corporate treasury buys in Bitcoin set off a massive rally. But eventually, when the flow of new institutional capital dried up, it triggered bear markets and prolonged drawdowns. The very catalyst that sparks a bull run can, over time, become the reason for a reversal. It's a lesson worth remembering as the crowd gets swept up in the current wave of optimism. So, where does that leave the savvy investor? If you believe in the long-term trajectory of Ethereum, its role in shaping the future of finance, technology, and decentralized applications, then ETH under $4,000 still looks like an attractive accumulation zone. But discipline is key. Avoid going all in at resistance levels, especially when the market is this frothy. It's crucial to manage your risk, diversify your exposures, and have an exit plan ready in case the unexpected happens. Consider setting stop losses below key support levels, and be wary of overextending yourself on leverage or derivatives. In rapidly moving markets, fortunes can be made, but they can also vanish in an instant. Keep a close eye on on-chain metrics, institutional flows, and the evolving macroeconomic landscape. The best investors aren't just optimists or pessimists, they're realists who adapt as the facts change. As we look ahead, the stakes couldn't be higher. The next few weeks will test the conviction of both bulls and bears. Will Ethereum break decisively above $3,800, setting the stage for a run at $5,000 and beyond? Or will the rally lose steam, exposing the market to a sharp correction and shaking out weak hands before the next leg higher? No one can predict the future with certainty, but by staying informed, disciplined, and adaptable, you'll be in the best position to succeed, regardless of which way the market turns. Now we want to hear from you. Do you think Ethereum will break $5,000 this August? Or is this shaping up to be a classic bull trap? Share your thoughts in the comments below. Your insights could help others navigate these turbulent waters. If you found this deep dive valuable, please hit like, subscribe, and turn on notifications so you never miss our next analysis. In our upcoming episode, we'll reveal the top altcoins that could directly benefit from Ethereum's rally. So stay tuned and stay smart. In summary, August 2025 is shaping up to be a pivotal chapter in Ethereum's story. The inflow of nearly $3 billion from institutions is rewriting the rules of engagement, signaling a fundamental shift in how ETH is perceived and valued. The technical picture is tense but promising, with $3,800 as the next major hurdle and $2,200 providing a solid backstop. The risks are real. Rapid institutional accumulation could pull forward demand, leaving the market vulnerable if new buyers fail to materialize. But for those with a long-term view and a disciplined approach, the current environment offers both opportunity and challenge. Remember, the most successful investors are those who manage their risk, stay grounded in reality, and adapt to changing conditions. Whether this is the breakout moment crypto bulls have been waiting for or the prelude to a sharp correction, one thing is clear: the next chapter for Ethereum will be written in the weeks ahead. Stay vigilant, stay informed, and keep your strategy sharp. And as always, thank you for tuning in to FinWise Now, your partner in making smarter financial decisions in an ever-evolving world.